Hi everyone, welcome back. Hope you guys had a great weekend. It's Monday now, and Riot actually threw me a little bit of a curveball today. They provided their their Q3 numbers. They did miss the targets, what analysts were expecting. We'll look at all that, and then is hosting the issue. We'll take a look at what they provided for hosting, but we got that. And then we got Core Scientific, huge growth in October, but is it enough to save them? I don't know until we actually get their Q3 report later on this week, hopefully, or next week. But we'll see. They haven't provided when they're going to do that. So that is it. So as always, you guys know the drill here, not financial advice for entertainment only. I'm investing in finding coins and companies. And let's get into the news here. Oh, if you enjoy this type of content, hit the like button, subscribe, helps me out tremendously. All right, let's take a look at the report. So I'm going to go over it in detail. We will go over it in detail with my numbers that I have for them. But Riot reports third quarter 2022 financial results, current operational and financial highlights. And why is this over here? There we go. It should be gone. Okay. So here's what we got for them right now. I've updated all the numbers for the Q3 numbers. That's why it took me a little bit longer. That's why this video is going to be out a little bit late. It took me a little bit longer than I wanted. And then we also have to talk about Hive provided their operation update for October along with Iris Energy. That's going to be in another video coming after this one, if I can get it done tonight. If not, it'll be out tomorrow. So I do apologize for that. Okay, now their self-mining came in at 22,070,000. I wasn't too far off. I was at 21,665,444. I was off by 1.8% on the lower side. My goal was always to be within 2.5% of that. I'm happy with the results that we got here on this, and hopefully we can continue this going forward into the next quarter, but we'll see. So that's good news there. So I've updated everything here on this. So we're now using the current quarter that we're in, which is going to be Q4, and we're using the three latest quarters, which are obviously the Q3, Q2, and Q1 for 2022. Those numbers are all added here, and we have a combined total of 165 million in revenue currently for them. Now, the fourth quarter and last quarter is estimates. This is more than likely going to change by the time we get to the end of December, but this is just an estimate of where we are right now, kind of like a snapshot of what could be potentially the revenue for the quarter. If we're looking at it at 50% net income from gross revenue and a PE of 12, which is kind of where the stock is trading right now, about $5 and something, I think they can go up to 20 PE easily once Bitcoin starts going back up. So we're looking at $9.88 for the stock, at least that's where I'm looking at it, to $14.83 with 75% net income from gross revenue. They reported they're at like 66%, 66%, I can't remember, but we'll take a look at it down below for the numbers for their self-mining, which is what we're interested in. But they had other things that also contributed to a loss for them. So let's get into that right now. We'll look over it from the Q2, see if there's any improvements, see if there's anything else. Here's some general highlights. BTC mined for the quarter was 1,047. Starting hash rate was 4.2 exahash. Ending hash rate was 5.6 exahash. Pretty good growth there. Average hash rate now is 4.9 for the quarter, which was pretty good as well. Hash rate increase, decrease. We can do that relatively easily. About 1.4 exahash increase on that. BTC mined per exahash for the quarter was 213 BTC per exahash on average. So we're using the average hash rate, dividing it by the number of Bitcoins, and we're getting 213 is their BTC per exahash for the quarter. Cost to mine 1 BTC came in at 82,000. That's including everything, all the costs. Cost to mine 1 BTC minus everything else, depreciation, everything else, came in at 14 million for them. 14,000. And that's not including their credits they have for curtailment. We'll get into that here in a little bit. Enterprise value, 967 million. Debt to equity ratio, 0.0824, up a little bit from 0.078 in Q2. That's not too bad. Current ratio was down a little bit, 4.45 from 4.93. So they're still in really good, healthy financial place. Revenue total, this includes everything that they have, self-mining, hosting, and engineering. This is at 46,290,000. General and administrative compensation expenses was 16 million. So I just wanted to take a look at what their compensation and administrative costs were compared to the revenue, and that's 34% of their revenue is general costs and administrative. So that actually went up, so that's not good. They were at 13.67 in the first quarter, 14.69 in Q2, and a huge increase here in Q3. Not sure why they increased by $6 million in one quarter. That would be interesting to know. Assets, let's see, cash and cash equivalents was 254 million, which is a slight decrease from 270 million. Accounts receivable went up a little bit to 17 million. Costs and estimated earnings in excess of billings, up a little bit to 15 from 13. Prepaid expense and other current assets went up 22 million. Digital currency was 125 million. Future power credits was 39, almost 40 million on that one. That's down from 54. Investments in marketable equities was pretty much the same, 2.1 million. So total current assets was 476 million, almost 477. A little bit of a decrease here from Q2 of about, what is that, about 20 million from there, 496 million to 476. Property increased nicely to 650, but we did have deposits on, I'm guessing, machines and things like that, went down to 178 million from 363 million. Intangibles stayed about the same. Derivative assets went down a little bit to 112. Right of use went flat, and total assets is now 1.45 billion compared to 1.436. So that is an increase in total assets. So that's good. Current liabilities, accounts payable went down to 12.6 million from 18.7. So that's good. Billing in excess of costs and estimated earnings went up to 11.2. That's not good. Accrued compensation went up as well to 5.1 from 3.2. Accrued expense went up way up, 33 million from 13 million. Deferred revenue, current portion, pretty much flat. It's down 100,000 or so. Contingent consideration liability, future power credits at current is 39. We covered that up top. Total current liabilities is 107 million, so that's not too bad. About 7 million increase. Total liabilities is 154 million, a little bit of an increase by 7 million. That's based from here. Total current liabilities. And then we get into total liabilities and stockholder equity went up to 1.45 billion from 1.436. So that's good. And then here we get into revenues now. So this is the interesting part. So mining was 22.07 million. Hosting was 8.3. It went down 1.5 million from Q2. I checked the financial report. I did not see any information for it as far as how much they actually are mining or how many machines or what exahash they have for customers. I don't know why they're so tight-lipped about it. But for them to make this, they're got to be pretty sizable as far as their hosting is concerned. Engineering was 15.8 million, so a little bit of a decrease here by 900,000 from Q2. Other revenue was 25,000 of something, or 250,000. No, that would have been 25,000. Total revenue was 46.2 million. Pretty sizable decrease from 72.9 million, and that is mostly because of mining. Bitcoin has come down, curtailment as well. But we'll take a look at the numbers that they have for the curtailment part of it. Expenses-wise, mining expenses came down to 14.6 million from 17, almost 18 million in Q2. Hosting went down to 14.2 from 15 million. Engineering went to 13.7 million from 15, so that was a nice decrease there. Selling and selling general and administrative went up 6 million. Not really 6 million, 5.3 million, but still quite a bit. Depreciation and amortization went up a little bit to 26 million from 20 million. Change in fair value, that was an increase of 17 million. Power curtailment credits was 13 million. And let's see here, realized gain on exchange equipment. What else do we have here that was good? Impairment of cryptocurrencies was only 5.9 million from 99. And total costs and expenses was 86 million from 438. So that's good. It's a good decrease there. Now looking at their gross profit operating income, down 86% compared to 501% negative here in Q2. So that is a good improvement on that. Gross profit depreciation minus depreciation was 7.3 million compared to 28 million in Q2. Gross profit minus depreciation percentage was 33% compared to 61%. And then if we take out for hosting, it's negative 5.8 million and minus 69% but they are using the curtailment credits to offset some of this, which we'll get into right now, and then we'll get into the rest of the other things. So here is where they reported on page, I think it was page 40 of their filing. They go into some details as far as how the curtailment works. So they're including it here in these tables. So revenue, 22.07 million, cost of revenues was 14.6, and then power curtailment credits, they're subtracting that from the 6.1 million here on it. So cost of revenue net of power curtailment credits is 8.5 million. That gives us mining revenue in excess of cost of revenues net of power curtailment credits is actually 13 million. So a 61.2% revenue on that one for their self-mining. Now, data center was 8.3 million in revenue. Cost of revenue was 14 million. Pretty in line here with their self-mining. So I wonder if they have right now, was it 4.95 something exahash? I wonder if they're pretty close to that for their hosting as well, given that the cost of revenue is pretty close to that, a little bit less. But power curtailment credits is almost 7 million, 6.996 million. And my question on this one is, why are they giving more curtailment credits to hosting than the power credits to their self-mining? That's the question that I really have on this one. Why is that there a difference for it? Is it just to make the numbers look better here for the data hosting? Because that came in at 13% profit compared to 61. But if those numbers were reversed or higher here, they may show that they weren't actually profitable. And you can see it here for the 9 months ended September 30th. They're actually showing that they are negative 12% on profit here. So that is obviously concerning. And one of the questions I would have, had I seen this before sending in the questions to Riot, would have been, how is this being calculated? What's your exahash for data center hosting? That way we might be able to get maybe better numbers on this and work some magic on it. But right now it just seems a little weird that they're providing 7 million compared to 6 million here. How is that distributed, basically? That's kind of what I'm looking at. Okay. Now going down here, operating expenses was actually pretty good. It was only negative 39 million compared to negative 372 million in Q2. So a lot of companies, I think, dumped a lot of stuff into Q2. And things are going to start improving here going forward. Net loss was 36 million compared to 366 million. They did come in at a negative 24 cents. I think the estimates were 21 cents, I think. Let's take a look at it here. Riot came in. Let's see, what did they have on here? Estimated EPS was negative, 2 cents. Wow. Definitely way below that. So they were looking at 2 cents, and they came in at negative 24 cents. And then shares diluted is 153 million combined for basic and diluted right now at the end of Q3. I have them actually at 167 based on where the price market cap is and the stock price is right now. They have been growing nicely here. They did say that they are going to get to 12.3 exahash by the end of Q1 in 2023 for their self-mining. And they did also provide, if I can find it here, that they are looking for, where was it? Let me do this really quick. Control F, E, H. This is how I found it. I was looking for their self-mining, what their exahash is, and also their hosting. But I couldn't find anything on the hosting as far as how much exahash they have. But I did find out, it was let's see if it was here. Or did I go up too far? Global logistics, COVID. Let's see here. The purchase agreements. Expenses, where did I see it? Revenue, costing expenses, other income expenses, non-GAAP. I just lost it now, I think. It was somewhere, liquidity. It was about them talking about possibly looking at other distressed miners. They're seeing that miners going to be in trouble for the next 2 quarters potentially. If that happens, they are going to be possibly looking into those miners where it makes sense for them to do that. And let me see, I can't find it right now. But basically, they are going to go shopping if something is appealing and it looks right for their business set. So overall, a nice improvement over Q2 for Riot. A couple questions that I had was the curtailment. Why is hosting getting more curtailment credits than their self-mining? If we can find that out, that'd be great. I may tweet out to Riot to see if we can get that information. And what else was there? Oh, general and administrative costs. Why did it go up 5.7 million more in Q3 than it was in Q2? What's driving that cost, really? Other than that, they just got to continue to execute on what they've been doing, grow, and possibly make hosting more profitable. Right now, we're seeing it's down 12%. For the 9 months, it looks like that is a drain on the company, on the shareholders, and everything else. I'm not a big fan of hosting. There might be some other incentives to do it. I'm not privy to them. If somebody knows, let me know down in the comments below. But overall, in the market that we're in, this is actually a pretty good report from them. It's not obviously what analysts were looking for, but what do analysts know anyways, right? I mean, they're just kind of looking at the numbers and trying to see where things might end up at. And I think they were just a little over optimistic as far as where things may end up. So that is it. That's all I got. Also, for Riot, I did submit the questions that you guys provided from Twitter, from YouTube, that all got submitted to them. I submitted them the way they were. I didn't change them at all. And I also added 10 questions to it that I had for them. So once we get those responses back, we'll do a video on it and we'll discuss what they actually provided as far as their answers. Okay. Now, given some things may be insider knowledge, which we will not be able to get answers for those things. And I asked them to provide us that information, if it is insider knowledge, to say that the questions are insider knowledge. Okay. Let's take a look at core really quick. Core is pretty easy. There isn't a lot in here, so we'll just run right through it. So Core Scientific announces October updates. And self-mining. So Core Scientific self-mining operations produced 1,295 Bitcoins in October, which is a lot. As of October month end, the company operates approximately 143,000 self-mining servers, accounting for approximately 59% of the company's total fleet and representing a self-mining hash rate of 14.4 exahash, which is huge. I'm surprised that they might be in trouble with their operations if they're making, mining that much and that high of an exahash. So let's get into the numbers that I have for them, and we'll call it a day for this one. And where's core? There it is. Okay, so start over here. 350 million shares outstanding. Stock price is around 16 cents right now. Market cap is at 56 million, which is just ridiculous. Obviously, a lot of fear in the market based on the news that came out last week with them possibly not paying their vendors, suppliers for October and November, and that they are in a cash crunch, basically, possibly going to cash flow negative. So here's what we got. Total current BTC HODL is 62. They sold a lot in the last couple months here. That is valued at 1.2 million right now. And looking at the numbers here for them as far as BTC production is concerned, let's see here. We got October numbers. Yep. So they started out the year at 1,077. February was 981. March was 1,143. Down a little bit in April, 1,121. May, 1,138, a little bit of an increase. June, 1,106, a little bit of a decrease. And then in July, we had a nice increase of 1,221. Then we hit 1,334 in August. And then September was 1,213, quite a decrease. And now we've finally had a little bit of an increase of 1,295. So they've been mining a little bit more during the month of October, it looks like. Efficiency-wise, they're about $89 per exahash right now, but they installed, how many miners did they install here they installed almost 14,000 miners just in the month of October alone, which is a huge number of miners getting installed. It's second to their highest here in August, which was 17,900 for them. They increased their exahash by 1.4 during the month to get them to the 14.4 exahash that we have them right now. They sold pretty much everything that they have as far as Bitcoin is concerned. They sold another 2,284 for proceeds of about 44.8 million. On it, in total, they have sold 287, almost $288 million in the last 5 months, which is a lot. They were close to having 8,000. If they didn't sell the 8,000 BTC here or close to that, they would have had almost 10,000 BTC back in June. And if we just add all this number up, let me see here if we can do that. 8,000. Let's just do this. They would have had almost 13,500 of BTC right now had they not sold, possibly even more than that. Okay, here's the numbers that miners that we got installed. So we got 13,980 miners. Those are the 100 terahash miners over here. That added in for mining for approximately 20 days, 20.2. The rest of the miners were operational for 24.5 days. They do curtailment, and I believe they get credits for that as well. So we got them to the 25.4 million, which is what we got here as well for them. Okay, next is institutions. Surprisingly, I think this data is a little bit outdated now, but I just checked it today. I don't know when institutions report, but we have 180 institutions right now. It's an increase of 2 from last month. Shares also increased to 71.76 million from 70.42 million. And percentage owner of the company by institutions is 20.08. The only thing that we did get an update on, and I think the analysts are running through the door as fast as they can, we dropped way down on strong buy ratings from 3 to 0. Buy ratings also from 6 to 1, and we now have 7 hold ratings on the stock currently. Price targets went down drastically as well from $10 to $5 for the high, average from $5.97 to $1.20, and the low from $3 to 22 cents. So a big decrease there as well. And based on the numbers that we're looking at here, we're still waiting on their Q3 results. So right now I'm still using the last quarter numbers here for them, which is the 78 million, which is right there. And then we're using the last 3 quarter numbers of the 109 million and 133 plus the prior Q4 of 2021. We're using those numbers to come up with the stock price. And even if we update that right now, well, right now I'm at basically $11 per share with a 50% net income from gross revenue. With a PE of 20 and 75% net income would be $16.61, also at a PE of 20. They are currently trading at less than 1 PE on it, and maybe rightfully so, given that they might potentially file bankruptcy if they can't figure things out with some of their lenders, I believe. So it's nice to see that they're growing their hash rate, but we really need Bitcoin to go up for them to escape bankruptcy, I think. And Bitcoin has been going up slowly. We may have a little bit of a, holiday rally going on in Bitcoin, but we'll see if that actually happens or not. That would be great for the miners. If Bitcoin was at 30,000, they would have mined close to, 36 million, 39 million or so on that. So we really do need that to help them out to get the revenue up for Core Scientific. So the only thing I can really say on Core is they're growing like crazy. They're doing all the right things. It's really only because Bitcoin's down in price that they're having such a hard time right now. And not just them, a lot of miners are having a hard time paying some of the debt that they took on during the bull run in 2021 to grow as much as they're growing right now. So that is the only concern there. If by chance, and there is a slight chance that they're going to survive this, but we'll have to wait and see. Possibly we'll get some more details in November, possibly December, and then we can actually decide whether it's worth buying the stock or not. I'm still thinking about it. I think if it gets down even any lower than where it's at right now, maybe around 10 cents, it's a gamble at that point. It's like buying a lottery ticket. You're either going to make something out of it or you're going to get nothing out of it. So not financial advice. You guys got to do your own thing. But yeah, that's it on it. Let me know if you guys have any questions, comments down below. As always, thank you so much for watching. The spreadsheet is going to be updated and provided to the Patreon members. And thank you everyone there for their continued support. Love you all for watching. I hope you guys have a great one. And then, like I said, we'll get the other 2 videos out, or 1 video for Hive and Iris Energy later on, either today or tomorrow. It's already late. It's already like 8 o'clock. All right, that's it. I'll see you guys in the next one. Bye.